What if your customers are trying to find your business online, but instead of finding you, they find your competitors? Now, more than ever, it's time to make sure you have the right SEO to make your business stand out online. Welcome to Go Mind Your Business with Terry Bork. Presented by Extreme Marketing Concepts, putting your business in front of the hungry herd of buyers who are looking for you right now. Extreme Marketing Concepts, helping you drive more traffic, dominate the market, and crush your competition. And now, here's Terry.
Hello, everybody, and welcome to another edition of Go Mind Your Business. My name is Terry Bork with Extreme Marketing Concepts, helping put your business in front of the hungry herd of buyers who are looking for you right now. It's my great pleasure to introduce you to wonderful people to our program today. On my left, we have Mary Turner with Mason Title. Welcome, Mary.
Thank you for having us, Terry.
Oh, I'm excited to have you here. Thanks, Mary. And to my right is Tom White, a mortgage expert over with Bay Cities Bank. Welcome, Tom. Good to have you.
Thank you, Terry.
Great. So welcome to our program today. Well, I'm really excited to talk with both Mary and Tom today. There's so much going on with real estate and refinances and interest rates. It's such a great time to become a homeowner, and making sure you get it all set up is very important if it's set up correctly. And I know that you guys are great at smooth sailing you through the process and trying to make it as simple for your customers as possible. So I know that we're going to be chatting today about some of the challenges that folks are facing, maybe people who are having some financial problems, things that they can do to make the process easier for them, and then understanding, a little bit on the title side, what that's all about, why it's really important, especially now, to have title insurance. And it's a great time because it's January, and again, we're here in our new studios here in Carrollwood. Our program today is brought to you by Extreme Marketing Concepts here on Go Mind Your Business. And Go Mind Your Business is part of the TalkWad Network, and you can check out other programs on the TalkWad Network by visiting www.talkwad.com. So let me share a little bit about my guest, Mary, today. Again, Mary Turner is a licensed closing agent and sales and marketing representative for Mason Title and Escrow Company. She provides title insurance and closing services in the Tampa Bay area, and she's done so for over 30 years. Wow. Mason Title currently has 10 locations in Florida, and they're growing and expanding every single year. Mary's clients are realtors, mortgage lenders, and homeowners who need title insurance and closing services for residential sales and refinance transactions. Mason Title is well connected in the community and active members of real estate and mortgage organizations throughout Florida. Mary's goal is to make the home buying a great experience by helping her clients navigate through the home buying process and closing, helping them achieve their dream home ownership, while providing insurance protection to title insurance protection for one of their largest assets. And again, Mary is with Mason Title, and you can find them online at www.masonttitle.com or by calling her directly at 813-264-6118. And to share a little bit about Tom with everybody, Tom grew up in Longwood, a suburb of Orlando, Florida. He's a graduate from the University of Florida, and he began his career in the mortgage industry over 25 years ago. Wow, long time as well.
Yes.
He's been a mortgage banker and a mortgage broker during that time. And the past 2 years, Tom's worked as a senior loan officer with Bay City Bank, where he continues to originate and broker residential loans. Tom's desire is to become a loan officer for life, and to do so, he focuses on your financing needs as it pertains to your long-term financial goals and suggests loan products along that path. Over 25% of the loans Tom has financed in 2012 were from repeat customers. Tom sets expectations up front at loan applications with borrowers so they know what to expect during the loan process. He prides himself on quick, efficient service And Tom brokers primarily to 2 lenders and typically gets the borrower's loan closed in 30 to 45 days, even in this high volume market. And you can reach Tom directly by visiting his email at twhite@baycitiesbank.com. And there's a hyphen between Bay and bank. So it's twhite@bay-cities-bank.com. Or you can contact him directly at 813-995-6385. And Tom is happy to pre-qualify you for your loan when you go to loancenter247.com. So let's talk a little bit with you, Mary. Tell me what title insurance is.
Okay, thank you for that introduction. Title insurance is a form of insurance that protects home buyers and lenders against title defects in real property.
Okay, great. And so what does it cover exactly?
There's basically 2 types of title insurance. There's an owner's policy that protects the buyer when they purchase a home against title defects or unknown claims or liens against the property. And the other would be a lender's title policy. And again, that would cover the lender against the same thing, title defects. A lender wants to be sure that they have a valid first lien position on a property. So if, in the event that they do have to foreclose, they're first in line for before any other types of liens that would attach to the property.
Oh, I would imagine they have the biggest investment probably,
Yes.
so they want to make sure that they're covered. Got that.
Yeah.
Okay, great. When do people typically buy title insurance from you?
Typically, they buy title insurance on a home purchase, and at that time, that's when the title insurance is provided to the buyer. And then if someone is refinancing their property, each time you refinance, you do pay title insurance for that lender's protection at that point.
Okay, great. So it's something that is required on every note.
Yes, it is required by most lenders. There are some lenders that may not require title policy. They may just get a search.
Okay.
But it's highly recommended that they get a policy, and they typically do.
Okay, great. Yeah, I would imagine you would want to make sure, even as a buyer, that you had clear title. I've heard that term a lot, clear title. Don't really know what it means, but I know that's what you want.
It means exactly that. The title is clear of any liens that you're not already aware of that is from a previous owner or something that happened in the past.
Right. Okay. So I can imagine, especially, in speaking with with realtors and stuff, they have short sales, a lot of them going on that are finally starting to close now.
Yes.
So I would imagine that on the short sales, there's probably a title issue. So you want to make sure any type of lien from the prior owner would be removed.
Right.
And that's what it's going to protect
well,
you from.
in a short sale, the property is in foreclosure, pre-foreclosure. So obviously you already have an issue with the title, and that's the foreclosure process.
I see.
So it is important in those cases to make sure, like every purchase really, that you have title protection against anything unknown. Unlike other types of insurance that insure something happening in the future, title insurance is the reverse. It's something that has happened in the past that would affect the title.
Oh, okay, that makes sense. Now, who typically is going to pay for the title insurance?
Well, it varies depending on the county in Florida. I have seen some counties that it varies, but in our county, it really falls under customary. What's typically the charges that are customary for, and it is customary for the seller in our county to provide title insurance and pay for that for the buyer's policy.
Correct.
And then the simultaneous closing that's happening if they're borrowing money, the lender wants a policy as well. And typically the buyer pays for that portion of the title. However, it is negotiable. And it can be a negotiable part of your contract. The real estate contract actually sets out who's going to pay for what type of charges involving the title insurance and related charges.
Oh, okay. So if a seller wanted to make their home more attractive, maybe in the market, they might say, we'll pay for your title insurance.
Yes, and the sellers typically do in this area provide that coverage.
Okay, I got that. Is title insurance expensive? How much does it cost
Well,
typically?
title insurance is promulgated in the state of Florida. The premium portion of title insurance is. So, for example, it's promulgated at $5.75 per thousand up to $100,000, and then increments over $100,000, it's $5 per thousand additionally, and then it goes down in increments as you go higher in the insured amount.
Okay.
So that's the typical cost on that. There are other related title charges in addition to the premium, and that would be the search fee, the fee that it costs to do a comprehensive search of the public records, and the examination of title and closing fee is also a separate charge.
Oh, okay.
So that is not promulgated by the state. So that is an area that you would find some difference depending on where you buy your title insurance.
I see. So should folks shop around for title insurance?
Well, you certainly can shop around for title insurance. However, what we see customarily is that a seller of property relies on their listing agent to choose someone that they know, like, and trust, that can get the transaction closed for them quick, someone that they have a history with, that they're familiar with. To handle that.
To handle that. Okay,
Right.
great.
But you certainly can shop around. It's like anything else. If would you drive an extra 50 miles, to save $20 or something? Because the portion of the title insurance that's not promulgated is not going to vary a whole lot drastically from
Sure. Okay.
from one place to another.
Okay, great. So that makes a lot of sense. If you're just joining us on Go Mind Your Business, we're currently speaking with Mary Turner of Mason Title and Escrow Company. And if you are looking for title insurance for your home, you can give her a call at 813-264-6118. So, Mary, we're talking about shopping around for a title company. Who selects the title company ultimately?
Typically, since the seller in our area pays for title insurance, they're the ones who select the title company when it's a purchase contract.
Okay.
In the instance of a refinance, the borrower pays for the title insurance for the lender. And some instances, a lender does pay a portion of buyer's closing costs, and they may not actually pay the fee, but it's typically a buyer cost.
I got that.
Borrower
Okay.
cost, I
A
should
borrower
say,
cost.
on a
Okay.
refinance.
Okay. Now, how often do I have to buy title insurance?
Well, title insurance and owner's policy is a one-time premium
Okay.
that is in effect as long as you own the property and possibly even onto your heirs. Each time you buy mortgage title insurance in a refinance transaction, you'll be charged for each transaction, because what happens is when you pay off the old loan, that title policy ceases to exist, and the new lender will want coverage
Okay.
for what their new loan amount is.
Oh, that makes sense. Okay. So just for each time you get a loan. How are title how are title defects discovered?
Okay, they're discovered by a search and examination of the title. The county has a comprehensive way that we go in and search the public records to determine not only tax information, but public record information to sort through and find any defects in the title.
Okay, that makes sense. What types of liens can attach to real property?
The type of liens that would attach to real property would be any unpaid mortgages, certain types of judgments, not all types of judgments attached to real property, unpaid taxes. There's bankruptcy issues and foreclosure issues that you do have to examine the cases to see how that might affect conveying title to real property.
Okay.
Mechanics liens, work that you've had done to the home that there might be an unpaid bill for, can create a lien on title.
Right, yeah. I've been hearing a lot of things in a lot of deed restricted communities that associations can place a lien
Yes,
on your
absolutely.
property.
That's
That's a weird one down here.
Yes, that's a big one right now.
Kind of scary that you want to pay your HOA dues, right?
Exactly. It
Yikes.
can become a lien on title for sure.
Right? Oh my goodness. So that would just be terrible.
You want to get
Something
that
like
taken
that.
care
Yeah,
of.
oh, absolutely. My goodness. What types of defects can affect the title on the property?
Well, there could be errors in prior deeds. Deeds have a certain way that they need to be executed with 2 witnesses and notarized. The legal description on the deed or mortgage could be incomplete or not accurate at all. Undisclosed heirs that may have an interest in the property. Also, restrictions that would limit the use of the land. And a big one, unfortunately, is forgery or fraud that
Really?
may take place.
Oh, wow. I would think they would discover that on your side. No, I'm kidding.
Well, that's why they get title insurance. Through
Right,
title
right,
companies.
right.
That's
Yeah.
exactly right.
So we can help out with that.
Okay, I got that. Okay. Well, thank you. I'm gonna turn and
Okay,
shift
thank
just
you,
a little bit
Chair.
on this side here, and we're gonna come back.
Okay. All right.
So I wanna just share again Mary's information, and Mary is with Mason Title and Escrow, and you can reach her at 813-264-6118. And Mary's over in the Woodland Center area here in Tampa, but I know firsthand that Mary travels all over the Tri-County area to work with anybody that needs assistance. You don't have to always go to her. She's amazing. She'll come to you and make sure that your closing runs super, super smooth. And I recommend her all the time to friends and folks that I know that are looking for a title agent. So I would definitely consider her in your title company search.
Thank you.
Oh, absolutely. So I want to just shift gears just a little bit. You know, sometimes before we get to the title, we absolutely need to get approved for our loan so we can get the money to get that house that we want to put a title on. So I want to introduce you again to Tom White with Bay Cities Bank. And Bay Cities has 5 branches in the Tampa Bay area, and Tom's provides mortgage financing for buyers and owners of residential properties. Tom is located off of 41.
Highway 41.
Right. Okay.
Yep.
But you can service also folks all over
yeah,
the
we
Tri-County area.
travel everywhere.
I know you're a busy
In fact,
guy.
Mary and I travel a lot of times the same places to close
I
our
bet.
buyers.
I bet. Okay. So Tom, share with us some of the factors that brought about the housing crash in the last 5 years.
Well, it really kind of began back in the 1990s. There was a lot of easy qualifying loan programs that came about where people didn't have to qualify income-wise.
Sure.
So if you had decent credit and you qualified based on your credit, those loans were pretty easy to get. This kind of fueled a real estate buying binge from 98 through 06, where we saw a rapid increase in values, especially in ending in 05, 06, kind of at the peak of the market. We saw like 30% appreciation in both of those years.
Okay.
Okay.
Uh-huh.
Well, what happened in that scenario is the home values started increasing so much that they soared past really the level of income, because remember, you didn't have to qualify
Right.
for that loan. So a lot of people were buying these homes that should not have been.
I got that.
So
Yeah.
these home values were going way up. But in
Uh-huh.
in 2007, a lot of those easy qualifying loans were adjustable rates, and they started adjusting, and people were not able to afford the higher payment. So those homes started to go into delinquency, and then foreclosures and short sales started to come on the scene really in 2007, 2008. And that was really the beginning of it. I would say back in the 1990s is when the easy qualifying loan programs came about, and then we kind of felt the results of it the last 5 years, from 07 through 2012, but, from a value standpoint.
I see. Okay. Do you think we've reached the end of the housing crunch?
Yeah, I really do. I think we're starting to move up in values. In fact, I read something just before I came here that the last 9 months, I was going to say the last 6 months, but the last 9 months, nationally wise, we've seen an increase in home values, at least going up, because the previous 4 to 5 years, home values have been decreasing.
Sure.
And that's mainly because those easy qualifying loan programs they're gone away.
Mm-hmm.
The stated income loans, the no-doc loans, those are gone, and now everybody has to qualify based on their income. So home values had to come back down to income levels,
Right.
and that's occurring now.
Okay. Okay. So would you think that 2013 is a good time to buy a home?
Outstanding time.
I bet it's an outstanding time. I know that for a
I mean, who would have
fact.
thought we'd have rates in the threes? I mean,
Right? Oh,
I mean,
I can't believe it.
we had huge volumes when rates were in the fives,
Right, right.
and now when rates rise over 4, people are so spoiled. Say, well, your rates are really high. Well, actually, no. Long term wise, they're fantastic. But with the interest rates at historic lows, and with home values coming down to about your 2000 price levels, this makes homes so much more affordable to people.
Sure.
So, and now the first couple of years of the housing crunch, 07 and 08, it was really hard to get like a 5% down loan. Well, now you can get a 5% down conventional loan, and you can also do a 3.5% FHA loan. So for the first-time home buyer, they can still get into a property with a low down payment.
Okay. But if they're doing the less than 20% down, they still have to do all those other, the PMI.
You're going to have PMI,
I
right? You're
think
going to have
that's the term.
PMI
Okay.
on when you put down less than 20%. You're going to have PMI, and if you can do a conventional loan and your credit score is high enough, I always suggest that, because your PMI factor on a monthly basis is going to be so much lower than it would be on an FHA loan.
Oh, that makes sense. Okay, good. So you look at all of that with your prospective buyers to see the right. Okay, cool.
Yeah, definitely. We'd look at the PMI part of it, but there's 3 components to the to pre-qualifying for a loan.
Mm-hmm.
First off, before you step into a car with a real estate agent, you want to contact a lender and find out how much you do qualify for.
Okay, right. Okay, is there a process that a homeowner can do to really go and get pre-qualified? Can you walk me through that a little bit?
Certainly, be happy to. Basically, the first component would be just to pick up the phone, and if you don't have a lender, please call me.
Yes, and you can reach Tom at 813-995-6385.
That's right. And then really over the phone, I will ask you the questions. There's 3 main components for qualifying. Cash for closing, okay, your credit score, and your debt to income ratios.
Okay,
So
let's talk about those.
Okay, the cash for closing, what I'm going to look at, I'm going to ask you the questions. I'm going to try to find out how much you have available for the down payment and the closing costs, because those funds have to be verified. That's part of the approval process, and the underwriter is going to look at. So I'm going to find out how much you have, and that's going to tell me really how to slot your loan. Because if you only have enough to put 3.5% down, then maybe FHA is the best way for you.
I see. Okay.
But if you have 5%, you have enough for 5% down and the closing costs, and your credit score is high enough, then conventional may be the best option for you.
Okay.
So, but I go into that in detail with the borrower over the phone and ask all the detailed questions to kind of find out, which type of loan, conventional or FHA, they're going to be eligible for.
Okay. I got that.
And typically, another phase of it is your debt to income ratios. There's actually been some brand new information just came out through the Dodd-Frank Act that debt ratios of 43% or less is going to be pretty much now where you want to be at.
Okay. 43% or less.
Or
okay.
43% or less than your gross monthly income.
Okay.
So if you calculate your gross monthly income, you want your overall debts, including your house payment, to be 43% or less than your gross monthly income.
Okay. I got that on your gross. Okay, perfect. I know that credit score you were saying really matters. For folks that I know, a lot of folks who are working on that, especially in now's economy. So a lot of folks had issues with credit scores. I know it takes a while to put it back together. And people are worried about it all the time, and it's an ever-changing number.
Right. It is.
Is there a credit score, though, that folks should be meeting in order to qualify for a loan? Is it 700? Can 600 get one?
Well, there is. It's typically for an FHA loan, you can go as low as 640, and I should say FHA and conventional. You can go as low as 640. Now, on a conventional loan, you're going to have tiered level pricing where the interest rate, if your score is your interest rate will be higher based on your credit score, okay, and your loan to value. How much of a down payment you put down determines your loan to value.
Okay.
So
Okay, so that makes a lot of sense. Yeah. I know that for a lot of people they say, "Oh, our credit." So, do you run that typically for somebody
I
when you
do.
look at all of that and say, "You know what, it might not be the best sign because your credit's a little funky. You might want to wait or you might want to get a bigger deposit because it'll save you,
I do. That's part of the
loan."
pre-qualifying process. I'll ask them for their information. I'll run their credit report, look at their scores, and then counsel them on what to do from there. If it's below the acceptable level, then I can refer them to another company that can help them bring that score up.
Okay.
And then they can come back once that score is higher. But that is one of the critical components of qualifying is your credit score.
Okay.
Obviously.
Yeah. Well, you said it was the three components together, and I think they all have equally weighted 33%. They're all
Yep, you're
pretty
about,
strong.
you got to hit all three to get the
Right?
house.
Okay.
That's true.
I
Exactly.
got that. Okay, great. Again, if you just joined us, we are listening to Go Mind Your Business on All Your Business Radio here at the TalkWad Network, and I've been speaking with Tom White of Bay Cities Bank. Tom's office is located on U.S. Highway 41 here over in Lutz, and you can reach him directly at 813-995-6385. We're going to take a quick break from our sponsor, Extreme Marketing Concepts, and we'll be right back. And welcome back to Go Mind Your Business on All Your Business Radio. My name is Terry Bork, and you are listening to us on the TalkWad Network over at www.talkwad.com. Check out some of the other programs that we have on our network. There's a lot of neat stuff that's going on, all sorts of stuff every day happening here. A lot of great folks coming down and talking to you on Talk Radio. Talk Radio is awesome and fun. So Extreme Marketing, what do? We put your business in front of the hungry herd of buyers, and something that we are doing right now for our clients is reputation marketing. Anybody can say anything about your business out there, and how you follow up with that is extremely important if it's a negative review. And if it's a positive review and people are reading more and more about you positively online, they're going to come and continue to do business with you. Setting that up properly for you on the back end is very, very important. And we're happy to work with you on setting up a proper reputation marketing program for your business. You can do that with us by calling 813-863-1452. So I'm speaking with Mary Turner of Mason Title, and I am speaking with Tom White of Bay Cities Bank. And we're talking with Tom right now about the mortgage process. And Tom, I'm curious to know what determines the interest rate for a borrower or that they'll get.
Yeah, the two main factors are going to be the credit score, their credit score, and their loan to value, which is determined by how much of a down payment they put.
Okay.
Okay. That's going to, if you did a conventional loan, that really determines more. Credit score and loan to value is going to determine your interest rate.
Okay.
Not so much on FHA. And for those people maybe below 680, say between 640 and 680 on the credit score on FHA and VA, you're really not going to have, you're going to have a minimal or no increase to your rate based on that credit score.
Okay.
So.
Terrific. Great. So, and then you're saying, so, if my credit score is, above 740, I'm going to, if my credit score is, at the top, I'm obviously going to get a much better loan.
Correct.
And I'm going to probably get a much better interest rate. Is that correct?
Correct.
Okay.
Correct. If you're over 740, I would typically slot you on a conventional loan because you'll get the best rate there, but also the mortgage insurance is cheaper on a conventional loan versus an FHA loan. So
Okay.
if you can do a conventional, I would always go that route versus FHA, definitely.
Okay, well, and that's great. And then if you could put greater than 20% down on a home, does that also determine, if you're going to get a better rate, or is that going to really determine the best loan to slot you in?
It does. I mean, 20% or more is going to get you the best interest rate as long as your credit score, again, is 740 or higher on conventional. I keep coming back to that.
Sure. Well, they all partner together. We found out they're married. It's a threesome, and they're stuck together, and you have to all partner together. I got that. Okay, well, it's G, folks.
That's right.
But they're all married, the three of them. Okay. Terrific. VA, we don't talk about that very much. Most will go and talk about FHA and conventional, but, especially down here in Florida, we have a lot of military down here. So is a VA loan still a worthwhile loan?
Oh, a VA loan is a great loan. First of all, it's a great benefit for those who fight to protect our country.
Sure.
They get to you can do a VA loan and put nothing down. Mm-hmm. Okay. You don't have any monthly mortgage insurance. It's a great benefit.
Oh, okay.
Even with putting nothing down.
Zero down. Okay.
There is what they call a VA funding fee that, depending on if they use it or not, if they haven't used it, it's 2%, but that's financed into the loan. It's not something that's carried on a monthly basis. It's financed into the loan amount. So, but it's a great benefit for those who protect our country.
Right. Now, I know you probably can't speak really on it, but I know when I was married to my first husband, he's Air Force, and we had an opportunity to use the VA loan, but it was advised at the time that it wasn't the right time to use it and to save it. Now, and I don't know if that's advice that changes over time, like, maybe the interest rates weren't better on a VA loan.
Were you
versus,
putting money down?
Yeah, versus like a conventional loan. So they advised to go a conventional way. And this was many years ago, and obviously the climate in the market has changed significantly. So, at this time, if folks have a VA opportunity, is this a good time to use that?
Oh, it's a great time.
Yeah, okay.
Great time to buy. Again, home values are low, interest rates are at all-time lows, and like I said, with the VA, you do not have a monthly PMI charge, which can save you, thousands of dollars a year.
Okay, great.
Yeah.
I often hear so many different types of terms associated with loans. You've got fixed rate, adjustable rate, 10-year, 20-year, 30-year. Can you explain some of this stuff to me? And then we get into P&I and all. What is all that stuff? I don't get it.
The mortgage business is a bunch of acronyms.
Right?
PMI, P&I, MIP.
Right.
It's a bunch of acronyms. The terms. First off, the terms. 30-year fixed means your rate's going to be fixed for the term of the loan, 30 years. 15-year fix is fixed for 15. 10 years fixed for 10. Adjustable rate mortgage, that typically has a fixed rate period of, say, 1, 3, 5, 7, or 10 years.
Okay.
So your initial rate will be fixed during that time period. Mm-hmm. After that time period is up, it will become a 1-year adjustable rate after that initial fixed period has gone by. Got it. Okay. So that's the difference between a fixed interest rate and an adjustable rate.
Okay. And how about like P&I? Sometimes I think there's all these little built-in extras that you don't, think about.
Well, P&I is really principal and interest.
Okay,
that's
principal and
your
interest.
monthly payment based on the loan amount. So let's take an example. Let's say you had $100,000 on a 3.75% 30-year fix.
Okay.
Your principal and interest, or your P&I, would be $463 a month.
Okay.
So, and just to run a comparison for you, because I'm a big believer in building real equity. For so many years, we could always count on the market appreciation to help us build our equity. But now, with the market dropping, I think home buyers really need to look at a 15-year fixed rate term, because that helps you build the equity quicker. Okay. And you can get a rate, let's say, in that same $100,000 at a 0.5%, typically lower than the 30-year fix. So let's say at 3.25%, 15-year term, that monthly payment is $702 a month. Okay.
So it's like a difference of $250.
Yeah. So for $250,
15 years, wow.
And you've got $20,000 more in equity after 5 years. So it's a great product.
Wow. So if you have to move.
Yeah, if you have to move, or even you could come back and refinance. You could say, hey, I want to buy a car. I'm going to refinance. Okay, I've got equity in my home. I can refinance and don't do a car loan, and I can refinance and write the interest off my mortgage loan, and I can pay that. I can pay that same $20,000 off in 4 years that you would normally pay a car off in. I can do that on my mortgage loan. I can decrease my balance in $20,000 by using that 15-year fix. So,
oh wow, that could make a lot of sense for some people,
Oh,
especially if
yeah.
they're looking at saving some money.
exactly.
And tax time, if that's still available to write off, that's awesome. I guess
It's almost like
still
a forced
is.
savings account, the
It
15-year fix. It
is.
forces you to make the higher payment, but you're really building your own equity, because when you sell that home, you're going to have that much
So
more
much
profit.
more money in your pocket to put down
Exactly.
on the next bigger house. Awesome. Again, you can reach Tom White at Bay Cities Bank by calling 813-995-6385. So I'm curious, I know you guys work a lot of projects together. They come in the door, they're working with you on qualifying for their mortgage and putting that all together. And I know you bring Mary in a lot to work with your title insurance. So how do you guys best partner together?
Well, typically it probably starts with Mary and I working together. Starts with me when I'm taking a refinance application. I have the opportunity I'm meeting face-to-face with the client. And I typically ask them, do you have any preference for a title insurance company? This will be where you go to close your loan. And if they don't, then I will suggest Mary. And in fact, we have a closing in about 3 hours from now.
Right, exactly.
We're going to once from here. But I will suggest Mary, and then and typically most people refinance and they don't know. If they don't know anyone, then that's a pretty easy sell for me. Mary does a great job in doing the title work, and she'll go anywhere to close anybody. Their office, their home, their pool. Not their pool, but
The tiki bar for
the beach.
for-
Yeah, the tiki bar. Yeah, she went way down on Pasadena last
Right.
year. to
Yeah.
close one of
Oh
our-
wow! Okay, yeah, I know you
can
travel.
See, you can see why I like to work with Tom. He's such an educator. I mean, I know that when people get to me, they've been educated on what their choices are for choosing a loan, and it feels
Thank
good.
you. Thank
Yeah.
you.
That they have been so educated on their options.
Right. Oh, that's awesome.
So I'll suggest, and then we get the loan approved, and then like right now, the docs are being sent to the title company. They will prepare the closing statement, and then Mary sits down with the borrower at closing and does the closing transaction.
So, where in the process of working with you does Mary come? Once the application is submitted to you from the buyer for them to
Correct.
get final approval, if they've been pre-approved, I'm assuming they submit an application to you, and then you bring Mary in after so she can start her process, because I'm sure it's just not like she looks it up 10 minutes before closing.
No,
I
right.
think it's a little more involved.
Good
than
point.
that.
There is a process to it. Yeah. Once I take the application, typically my processor will contact Mary, and then we order the title commitment, and they'll let Mary talk
And
about it.
at that point, we go ahead and take that information and order a comprehensive search in the public records, and give back to Tom, his office, a title insurance commitment, and that's going to show who's entitled to the property, what requirements are necessary to insure the loan, and then the title exception, so that going in and sending that off to the underwriter, they know that the title either looks clear or it doesn't, or what type of loans and liens that we have to pay off to get to the closing table.
Okay. Is there a typical process of time? Can you say it typically takes 10 days, 20 days?
We're actually very quick
Very
turnaround
quick,
time
yeah.
on our title. Searchers, obviously, on a super rush, I can get them in 24 hours. I don't like to ask my title department to do that
Right,
on every
right.
case.
Sure.
So 3 to 5 business days is typically
Okay.
a turnaround time for the title search to be prepared. If it looks like it involves a lot more than that, if there's several cases we have to look at, whether that be divorce or bankruptcy or foreclosure case, we'll let our client know that it may take a little bit longer to get the title search back.
Okay.
And that way they'll know how to adjust their calculation on a closing
But we
time.
typically have the title searches back, like Mary, very early in our because our process
you
is
do
30
it
to
at the
45. We do it at
Right,
the beginning,
beginning.
right after I take the application.
Right.
So
Do you
yeah.
do you check it again though, right before closing,
Yes,
just to
we
make sure
do.
that
Yes,
something
we
sneaky
do.
didn't show up? It's like, oh, they're
Exactly.
closing. I got to get that in before they leave.
Exactly. And there is actually a gap time between the time we actually close and the time the documents get recorded. And that gap time does fall under your title insurance policy. So the way we're working today is we are e-filing documents where they're getting recorded a lot faster, and that takes away from some of our exposure there for title liens or encumbrances that would come in that gap period.
Okay. Yeah. Well, that's awesome. I would imagine, maybe on some of the houses that are having some challenges, maybe with some, just folks who just, go bankruptcies. I mean, it happens. Folks get in trouble for whatever reason. So do those type of things take longer? I mean, how do you go about clearing that title so it's clean for the next person?
Right. Once we get our title search back, if there are any issues, we just start working right away, contacting the owner of the property to try to get more information about the lien itself. And then we make the proper contacts to negotiate getting that released. We actually go in and clear up everything that's on the title commitment before it can go to closing, whether that be something as simple as unpaid taxes. Sometimes it can be something a little more complicated, like a federal tax lien, or something that takes the customer's involvement to help us get to a point where we can pay that off or negotiate a balance on it.
Okay, and I imagine after working in this industry for 30 years, you've probably
We've
seen
seen it all. Yes. And I will say that when it's a purchase contract, there is a clause in the contract itself that once a title defect has been discovered, then it's already agreed ahead of time that they'll have additional time that this can be perfected to closing. Because obviously if something is found out a little bit later in the game, it may take a little while to get through it and to get on the other side. So there are provisions in your contract that would benefit the clients, and there's an agreement up front about that.
Can I ask her a question? Do you mind?
Yeah, go ahead. You go. You ask whatever you want, Tom.
I'm just curious. We rarely have title defects. What percentage of the?
You've got really good clients.
What percentage of the title commitments you issued, had defects that had to be resolved? I mean,
it's not extremely often. I wouldn't say it's rare either. I would say probably maybe 20%.
Okay.
Of our title commitments. Now, of course, we're clearing other things. We're clearing homeowners association liens that are, that's pretty simple to get taken care of.
Right.
And of course, we have to order the mortgage payoff of the existing loan and get that in writing so that we know how much to pay off any existing loans on a refinance. But yeah, they're out there. Okay. Sometimes we silently clear them up, and the clients don't even know if there's a problem.
Okay, well that could be good for the client.
That is good. Yes, I'm sure you've done that many times for us.
Wouldn't they want to know that there was a problem with their title, or some of it's just so silly that
some of it is just proper documentation. Let's say someone records a satisfaction of mortgage and they recite the wrong OR book and page. Or there's something wrong in the legal description, something that we could quickly get fixed, get corrected before the client even knows about it.
Oh,
it's all the better.
Yeah, it's all the better.
Right. Okay. Well, it probably keeps the file clean.
Right. And if you think about it, there's such emotion in real estate closings. You've got two families moving.
Yeah.
There's so much that's going on.
They don't want to be bothered with that.
No, I imagine they wouldn't. Yeah. Okay. And now you can do the refi as well as a new home purchase.
Yes.
Okay. And you are needed for both types of transactions.
Yes.
Okay. And you, Tom, can do the same thing, right? You can do refis as
well
definitely. As
we do purchases as well as refinances, and right now is a great time to refinance as well.
Sure.
Because many people could be at 5.5% or 6.5%. If you can save 3% or even 2% on your mortgage rate, depending on your loan size, it could really benefit you.
Sure. Is there any just maybe quick off the cuff advice maybe you can give to folks that maybe are struggling with financially with their home? Is there anything that they can do?
Well, yes. I mean, I would contact the lender that services your current loan if you're behind on your payments, and see if they'll work with you to decrease it, because there are some options available and some programs out there that lenders are able to help service those who are possibly behind on their mortgage payments. Yeah.
Okay.
Now there are some things too we can do that I can do on the refinance side. One of the refinance programs that we do is called the HARP. That's Home Affordable Refinance Program, and this allows people who may be underwater on their home to refinance and take advantage of this low rate environment. Okay. What's nice about that is on that product, most of the time you don't need an appraisal on the house. When we run I would take their loan application, run the loan application, and get an approval. The approval typically, it has an AVM, an appraisal valuation model that comes up with the value of the property. Okay, and they use that value for the purpose of the loan, so the customer won't have the appraisal cost, and they can know up front before they even spend a dime whether or not they qualify for this HARP program.
Oh, that's awesome.
And typically, we used to only do 125% loan to value. One of our lenders just went up to 200% loan to value.
Oh my goodness! Wow.
So if you're underwater and you have a and you want to lower your payments, there's a good possibility you can do that.
Right, because I know a lot of people really want to stay. They don't want to move.
Yeah, they don't.
Trust
No.
me, moving's a pill.
And most people are good people. They want to make their payments on the house. I never advise people to go delinquent on your mortgage payments. That's not a good option. That can affect your credit and can hurt you down the road. Now there are, situations in life come about where a lot of times you can't help it, but and that's where you need to contact the lender and get them to work with you.
So there are, but they, knowing that folks who might be having problem right now who are listening, there's things that they can do. They just shouldn't just tune out and just disappear and go under a rock. They need to do something, take some sort of action.
Definitely.
Call you, call their lender.
Yeah, feel free to
maybe let Mary know.
Right.
Well, I'm going to be using my title insurance.
Well, and when all else fails, if a borrower cannot, come to an agreement with the lender, they may choose to sell the home and go the short sale process.
Exactly.
Okay, so there's all sorts of help available to home buyers out there.
There's a lot of
That's
help
awesome.
available.
Oh, that's
Tom,
terrific.
do you want to touch on FHA Streamline?
Yes, FHA Streamline is
good.
a great idea, Mary. Yeah, that's another loan product that does not require an appraisal. If you have an FHA loan, all you have to be doing is lowering your interest rate, and it's a streamlined process in the fact that you really don't have to be requalified. That's one of the only loans out there where you don't have to be requalified. So as long as you're lowering the interest rate and you don't need an appraisal, okay, and typically the closing costs, I can pay, or the lender can pay most of your closing costs on your behalf based on the pricing that you take out. So that's a great product to reduce your monthly payment and save on your monthly payment, and you recoup your closing costs really quickly because it doesn't cost you that much to do that.
Is that a full closing process?
It is a normal loan process, correct.
Okay, so
but
you
there's
have to
not
qualify?
They do not have to qualify.
Oh, okay.
But you still have to fill out an application and sign all the documentation.
Okay.
But you don't have to qualify income-wise, okay?
But it's going to be less, and you're already paying more, right?
Exactly. It's going to be
So
less.
that's good.
And
And do you get to get involved with those?
I do.
Oh, okay.
And I think it's so great to get the word out there for people on the FHA Streamline, because they don't know it's available. I've closed so many people with Tom that had no clue that this option was available to them.
Yeah.
Okay.
It's a great product, and I think we did in time frame. I think we did one in about 2.5 weeks. I think.
Oh, wow. Okay.
We had a client that closed in December on that.
So what's a good interest rate that folks should be looking at? You said the interest rate now is about what, 3.75 or 3.25?
Depending on your term,
Okay.
3.75, actually around 3.65 on a 30-year right now.
Okay, so
And about 3.25.
5% would be if you're up around 5, you should do it, or you can do it. You can just keep doing it and bring it lower.
You can put 5% down. There are some conventional programs that will now do 3%. So if your credit score is high enough.
Yeah.
But you were talking about. I'm
interest
sorry.
rate.
Talking about
Interest rate.
Thank
Yeah.
you. Thank
I
you
just
for
wasn't
keeping me
sure,
straight.
what's a good thing for folks to say.
A good rule of thumb is around a 1.5% to 2% break.
Okay.
Okay.
All right.
The higher the loan amount, the lower the break needs to be. So if your loan amount is 200 or 250, 1.5% may be enough. If your loan amount's around 100, then 2% is kind of a rule of thumb you want to look for as far as a lower interest rate.
Okay. All right. That helps me out. Is there anything else that you'd like to share with our guests today?
Yeah, I would. There's been a lot of changes in the mortgage business. One of the changes is, as I alluded to earlier, a lot of the easy loan programs have gone away. So going forward, for the last few years, mortgage lenders have to get a lot of documentation. And it is a process that I try to educate buyers up front and let them know that we're going to need some documentation now. I may need some additional later, depending on what the underwriter asks for. So it's a little bit more documentation. It's a little bit more labor intensive on the consumer's part to get loans through these days. But this is what's required because the lenders have experienced a lot of foreclosures and short sales. They're now verifying everything. Right. So just be prepared when you come for a loan that, whatever documentation we ask for, please supply that. And I'll coach you as far as, what we're looking for and what would work in each situation. So.
Okay. Got that. Okay. How about you, Mary? Is there anything else that you'd like to share with our listeners today?
Well, I enjoy seeing people buy a home, and I like to make the closing process one that people are going to remember for all the right reasons. So in addition to, Tom and I like to make sure that all of this information is handled in the background to where when we finally do get to a closing table, that we have clients that can enjoy this process, even though it's taken a lot to get there.
Okay.
Definitely.
Perfect. Okay, well, great. Well, it's been my great pleasure to have both of you on our program today. Thank you so much.
Thank you, Terry.
Yeah, it's my pleasure. And again, you can reach Mary Turner at Mason Title directly by giving her a call at 813-264-6118. I know she'll do a fabulous job for you securing your title and protecting your home. And you can reach Tom with Bay Cities Bank by calling 813-995-6385. And again, Tom is outstanding. He's a very professional person to work with, and he will guide you through that financing process, which can be so cumbersome. And it's nice that somebody can just break it out, make it simple. Just tell me what I got to do and get me through it and let me get in my home. So both of them are just awesome at what they do, and I recommend you get in contact with them. My name is Terry Bork. We are with Extreme Marketing Concepts, and we help put your business in front of the hungry herd of buyers who are looking for you right now. You've been listening to Go Mind Your Business on All Your Business Radio, brought to you by the TalkWad Network at www.talkwad.com. I hope that you all have a wonderful rest of your day, and I look forward to speaking with you next time. And until then, go mind your business. Take care.
Thank you for listening to Go Mind Your Business with Terry Bork, presented by Extreme Marketing Concepts. If you want to drive more traffic, dominate the market, and crush your competition, find out how by visiting our website, www.extrememarketingconcepts.com. And join Terry next time for another episode of Go Mind Your Business.